Hi, my name is Sukrit Ghate and today we are going to do the daily Nifty analysis. So let's get started. Today there was a very drastic fall and today might have been a very good day for some people and a very bad day for some people. And that brings me to the point where I have spoken about this in the previous video. It was the weekly analysis video where I had marked the level and I talked about that level being very important, and today that level has particularly shown how well it's worked again. So in today's daily analysis video we are going to be looking at the weekly supply zone that was formed only because that has played such a prominent role in forming supply zones, and let's see how that level has worked today. So this is the daily chart. The market has been forming some more supply zones on the daily chart as well, and now we'll be seeing some reactions from the demand zones that have been formed while the market has been going up. So let me just show you the weekly level, which has worked very well again. So this is the weekly supply zone that has worked wonders, and the level that I've marked is a rally base and a drop. So now why I'm saying this level has worked very prominently and why it has had such an effect on the market and all these things, only because of the way the level has held every time the market has tried to go up. It has it's not let the market go up, and it's always kept up with the market. So let's see how this level has worked and what are the possible outcomes of the particular situation that is formed right now. So this level, as I had said, this level had a few touches in the past as well. This was formed somewhere in the month of October. If you see, this was in the month of October, and I'll show you how many times it's been touched. This was the first time it entered this zone. From here there was a little bit of a reaction. That was also a very drastic reaction. For a weekly chart, such big red candles are very drastic, and they're very important in order to learn how the market is going to be reacting in the future as well. So it fell down and came back again. So this was the second time it touched, then fell very drastically again. It's gone, and for the third time it's touched again, right? Fell down very drastically, made some lows. If you see, this was a low that was formed, and from here our market has been rallying for quite some time, right? So all these candles are rally candles, and everyone has a positive outlook of the market, right? So yesterday and today what happened and why it's happened is this, and this is the reason. This is the fourth touch, and as you see, the expectation that I had was, since it's already been touched 3 times in the past, the strength of this zone would reduce, but the fourth touch as well, as soon as it came into this zone, it's reacted. So I'll just erase all of this and I'll show you how that has how that is portrayed on the daily chart. As you can see, this is the daily chart. This was yesterday, this big movement, and this big movement is today. So now you must be wondering what is going to happen, what kind of things are we supposed to expect. So if you go on a lower time frame, we'll definitely be able to find some very major supply zones. And on the daily chart, I'm going to show you a demand zone which has the potential to work, and I'll just mark it for you so you can see how that zone might work in the future. So this is a drop over here, there is a gap, so we can consider this a candle, a drop, a base, and a rally. So this is the demand zone on the daily chart, right? So when the market comes with this demand zone, you can look into buying some calls, you can look into buying futures, you can look into buying some stocks that move with the market, right? And these are a few things you can do. But at the same time, since there are supply zones that have formed on the lower time frames, we need to be a little more careful, because now the outlook of people who are trading or the people who trade in big capacities is negative. So when you're going against them, you need to be a little more careful, since this would be a trade which is, somewhat of a counter trade, but it does not matter. This is a good zone, and we can definitely see a positive movement once the market comes to this area. And the range of this zone is somewhere in between 17,335 to 17,175. So this is the range. So if you're planning to trade this zone, this would be your stop loss. So 17,175 would be your stop loss. So whatever trades you take them and use stop losses when you're taking those trades, because risk management when you're trading is very important. So if you want, we can check out some zones in the lower time frame and see what kind of a reaction we'll get on a smaller time frame. As I can see, there is a zone that has been formed here. Again, it's a rally, base, and a drop, but it's quite far. And the demand zone that I had marked, this is the 120-minute time frame that we're looking at. On the 120 time frame also, this demand zone is very prominently there. It is a rally, 3 basing candles and a rally. So you can definitely look into buying once this range is hit, and I would expect you to be very safe with your stop losses. Other than that, we have done the analysis. We have gone to the weekly zones, we've gone to the daily zones, we've gone to the lower time frame, which is around 120 minutes, and we have seen the overview of the market. And I'm not going to be ending the video only here. I usually get asked a lot of questions, and one of the biggest questions that I tend to get asked is, can you buy at the lows and highs of the market? And the answer is going to be given by my mentor, by the co-founder of PerpetualProfits, and I'll hand it over to Mr. David, sir.
Thank you, Sukrit. Yes, I'm sure you heard this before, right? Don't try to buy the low of the day, or don't try to catch a falling knife. Is this really true? Wait till I show you something. So this is a trade which I had planned on the 2nd of September. So this demand zone in the 15-minute chart of HDFC was formed on the 2nd of September. I got a fill for my trade, which I had planned today. That's almost after 8 trading days. Okay. The entry price that I had planned for is 2405.9, and my stop loss is at 2392.2. Okay. I usually keep my entry price just above the demand zone and my stop loss just below the demand zone. Now, though I had placed today morning an order to buy at 2405.9, the price that I got a fill was at 2398. Okay, that was actually the opening price of the day. And if you notice over here, it is not only the opening of the day, it's also the low of the day. Okay, so this fill I got very early in the morning. Of course, to be able to get these kind of fills, you have to place the order before 9. So that's what I had done. I usually place my orders before 9. And the system gave me this fill of 2398, which is the actual low of the day. Okay. And so if you are good at identifying demand zones and supply zones, you can actually buy. Many times it has happened, I buy the low of the day or maybe close to the low of the day. And sometimes I sell at the high of the day or maybe close to the high of the day when I identify supply zones. So if you can see, it gave a very good move to the upside. And this was, so it's not unusual to be able to do this. So don't believe all those lies that people tell you. You cannot buy the low of the day. There's nothing like a falling knife in the stock market. If you're willing to take a risk and a calculated risk, see here, my risk is at the most I would lose my stop loss, right? So it's not a very big risk. It's a calculated risk, but kind of reward that I could get, is almost, you can see here, almost about 3 to 4 times the risk that I'm taking. So it is worth the risk.
Thank you for watching the video. Take care.